with that beautiful view.
Yeah,
Hey,
welcome in. How you doing?
Hey, I'm doing well. How you doing?
Good, doing good.
Yeah, are you doing well? Because you seemed a little heated not too long ago, dancing around here on the phone and everything.
You know, I do kind of find that in this section of the office that I have a little more leisure and space to have more energy on my conversations. So meaning that I get to walk around. Like honestly, like I don't know, some people it probably works for digging in on the computer and just focused on like the screen and then having your conversation while you're doing it. But honestly, I found that walking and talking, it's actually a way better thing. Yeah. Your body just works differently and it's better.
Yeah, no, I do the same thing. Like I usually at the house is when I'm talking to people, but a 45-minute conversation is not going to be seated the entire time.
No.
I'm going to be up all around. And sometimes like I find myself moving around so much, like all of a sudden I'm thinking to myself, wow, I sound winded on the phone. I got to calm it down a little bit.
Yeah.
But I think people can tell that I'm up and going, and I don't know where that comes from. It just, it feels more natural.
Well, the issue I run into too is that if I'm on my computer, bing, email. Oh, let me go look at this and think, what were we talking about? You know, so that tends to happen too. I get distracted. Even it was earlier in the week, and I was doing a walk and talk in person, and someone like, Trent, are you focusing on your computer right now? Or are you talking to me? Like, no, I'm just having a really slow processing day. But I am walking around, not even at my computer. So
really, but they thought you were.
They thought I was. Yeah, I have a tendency to do that, where like I'll trail off in the middle. And
you do that,
like,
a lot. Yeah.
Well, I'm sorry, right? You know, I'm like, oh yeah, this is the answer. I'll repeat myself a couple of times. Yeah, my wife yells at me a lot about it. But the walking and talking really kind of improves things. Yeah, I feel like
I am one that's like, let's solve one problem at a time. So when people, when I get people on the phone and they present me with a problem within like a minute or two, I'm trying to solve that problem already. And then I find that they're continuing to talk, and I probably missed out on some important stuff. Yeah, you know, but I'm already just like, okay, let's solve this problem, then we'll move to the next one. That's just how my brain works. I like to, you know, do one thing at a time and finish it and move on.
Yes. Well, the secret is actually just have a notepad, write it down, tell somebody that I'll get back to you on this as quick as I can. You've noted the problem, and now go back to the conversation. And if another problem arises, note that one down too.
Smart.
And so instead of trying to solve it right there, take the notes, solve it right afterwards, you know. I get this from like my coaching actually. They're like, hey, if you happen to be doing like a call block and you're dialed in, making your calls, but then somebody's like, hey, I got a question about this DPA product. And if I don't know the answer right away and I need to look it up, well, I don't want to shift gears and get off my call time blocking just to go look up a DPA question. Yeah. I'll write it down. I'll finish my call block, and then I'll go, hey, let's take and look this up. Let's now get back to them, and it's still within a reasonable time frame. You know, it's rarely on fire. If it's on fire, then I'll stop what I'm doing. Yeah. You know, but until then, no, let's just keep rolling, keep your energy on the same task, and you do better at it. Solo tasking is way better than multitasking.
I completely agree.
Yeah. My wife will say, that's my thought because I can't do it. And I'm like, well, she's like, I'm multitasking all the time. And I'm like,
well, here's the thing too. Like my wife and I, we work differently too. And I don't know if Rishwa works this way, but my wife, she does multitask a lot. She starts a lot of tasks, but she doesn't really complete a whole lot of tasks. Yeah. Like it just kind of gets by the wayside, and then we start other stuff. And sometimes I'm just like, can we just like focus, get rid of this stuff, and then we can move on? Yeah. That's just how my brain works.
Well, I'll find I'll do something like that. If I try multitasking too much, generally what happens is I realize that I have a bunch of 50% completed tasks. I'll have a email and a draft. I'll have a loan up on my system that I'm looking at. And I've completed neither of those two tasks. And then it's like, oh, I need to go talk to somebody about this. So I go and talk to somebody about that, come back, and then by the time I've walked back to my desk, there's probably a third task that I'll start and not finish. Yeah. But if I just focus on this one, boom, focus on this one, boom, focus on this, boom, done.
Check stuff off.
Yes.
So, you know, it feels good to just be like, okay, I did that, I'm done with that. Okay, I did that, I'm done with that. Move on to the next thing. So are you going to share with us what that conversation was about earlier? Or, you know, I mean, at least give some insight onto maybe your job as a lender in this specific scenario.
Yeah. So I had a listing agent, and I was putting on more of my mortgage advisor hat. in this case, because I'm not the loan officer involved, and they're kind of fact checking some of these fly by night lenders out there that are just kind of get something started, not telling the full details.
So they're the listing agent. They accepted an offer from a different buyer's agent that has a different lender.
Correct. Yeah,
okay.
Great clarification on that.
Yeah.
That's rolling. Now they came in and said, it's an FHA, it's got down payment assistance. What they left out is that it's a county level down payment assistance. Not all down payment assistance are created equal. Now, obviously, by the time this one airs, there's a high chance that Hometown Heroes is run out of money.
Yeah, that's a good point. It's a good point. I mean, I think it will.
Right. But that is one of the most common ones in Florida. But they are not all created equal, and not all lenders handle them the same way. So my personal favorite way of doing a down payment assistance, when I do them, I like it when the second lien, which is what a down payment assistance is, typically, it'll come from the same lender.
Okay.
The reason I like that is because I can still pull off a 30-day or less close on it.
That makes sense.
They know what the guidelines for the first lien main mortgages. They know their own guidelines for the second lien mortgage. They have all the details in, and they're going to underwrite it both at the same time. I'm dealing with one underwriter.
Yep.
I'm dealing with one set of rules.
Yep.
Which we already know how underwriting can kind of be as it is.
Yeah, I mean, they're always going to require extra stuff, and if you got two parties requiring extra stuff, I mean, it does seem like a little bit more of a mess.
Yeah.
So.
And so what happens is when you use something like an Orange County down payment assistance, what happens is you have to first underwrite the file, get approval or majority of approval, because you don't have approval from your down payment assistance, and then you have to send it over to Orange County, which is a third party. They have to do their underwrite, make sure it's approved, and then send it back. Now you're not done at that point either. They have to make sure that the terms that you thought you were getting from Orange County are the same terms that you're actually getting, and now you can finish approving the loan here.
So in this case, the Orange County is acting as the other lender for that second loan.
Yeah, they're providing the second lien that way. But
they don't have to, as the lender, or the lenders will provide it.
Yeah, some lenders they do it. They do it as a repayable. You make a little bit of payment over 10 years. Some of them do it as forgivable. Don't pay us anything on second lien, and we'll forgive it once you've taken and paid 10 years worth of payments, 5 years worth of payments, however it's agreed upon for your main lien, and that goes away. There are some that act as grants. Those are kind of cool too, I think.
Yeah. Really cool.
They're a little pricier.
So fees. It does cost you something in closing costs or
both. Okay. Yeah. Well. So there's closing costs. Maybe your rate's a little different, but the nice part is that I often tell my clients that there's a way to refinance you quickly on an FHA loan called a streamline.
Yeah.
Less credit checks, less employment checks. Don't even need another appraisal. And if that second lien's gone and you're at this rate, which is above the market rate by at least 0.5%, I'll get you the market rate.
Yeah.
For very little cost, because there's a lot of things get refunded. Your title gets refunded and then reissued. Your upfront mortgage cost gets refunded and then reissued. So it's a great way to have some savings. Yeah. But my biggest gripe with the county-based ones is it's another third party in the transaction.
Yeah.
I mean, don't we already have enough?
Yeah.
Like the appraiser is a third party. The inspector is a third party. Insurance can even be a third party that sometimes causes delays. Not everybody works quickly.
Yeah. And no offense to government entities, but they aren't known for their speed.
Right.
Or their abilities, really.
I don't know too many times that I've seen somebody boast about my clear to close time with Orange County. I'll get the post like a couple of times. Like, hey, I got this file clear to close in 5 days. I've got this one clear to close in like 12 days. Stuff like that. But typically not on those.
No, they become memes.
Right. Exactly. Yeah. Well, and the real problem all came from the fact that they didn't say that it was a third party involved for the second lien.
Oh.
And the reason it was an issue is because they came in saying, hey, we got a 30-day close.
Oh.
Get towards the end and start saying, hey, we're going to need some extensions.
Yeah.
And they're like, well, we actually had 2 offers come in at the same time, and this one looked like it was going to take longer. And I'm like, they were probably the same time frame.
They're probably very similar loans.
Very similar. Yeah, both were down payment assistance.
So, I mean, it seems like when you get down payment assistance, there's certain properties that, they're first time home buyer type properties.
Yeah.
That, that's what you qualify for, and that's what people can afford.
Yeah, at certain price points, it's more common at, because it's a starter home, starter price point. The median income fits it a little more.
Yeah. Well, I mean, I hate to say this, but I actually have to make a phone call here in a little bit to see if we can extend a closing of ours.
Oh.
That we tried to get the loan on. We didn't get the loan. It was they shopped around. In fact, the person that I thought got the loan ended up not getting the loan either.
Oh.
Another person got the loan, and it went down. But the interesting thing about this one is we're representing the buyers here in Florida. They're selling their house in Georgia, and they accepted an offer that had a contingency of an offer, and then we wrote an offer with a contingency of a sale.
Yeah.
And so we have a daisy chain.
That domino. This one has to fall to make this one go, to make that one go.
And in reality, the listing agent who I have to make a phone call to never should have accepted our offer. We gave extra closing, but they're obviously, our client's home was under contract, but the home that is at the very front of the daisy chain is not under contract.
Is it still not?
It's still not under contract.
Uh-oh.
The difference is the people that are selling that one, they can qualify without. And so what we're doing is they are just going to qualify without, and then, not have that contingency be part of the sale. But we're like 10 days away from closing at this point, and we're going to have to redo a few things. So we're going to have to extend just a little bit.
Gosh.
It's not the best scenario, but at the same time, it was like one of those things representing the buyer. It was one of those things where it's like, well, it's kind of up to the listing agent whether they want to accept such a risky loan or not.
Well, they did. I mean, offer. It's the offer, right? Yeah. I'm offering you these terms. I'm telling you what's going on.
Yeah.
Just so you know.
Yep.
Because you guys are transparent. You're not trying to sweep anything in the rug and then be like, oh, by the way, can we get a 30-day extension? They're like, an entire another contract worth of extension? No, you're like, up front, we got here's what's going on with it.
We did have a 2-month offer. It was almost 2 months.
2 months? Yeah, I remember that.
So it was a good amount of time. So we were hoping that things would kind of go our way. But they obviously haven't. The buyers, that are selling their home on the other end, they originally had that listed for like 600 something thousand, and about a week or two ago they reduced by 100,000.
Oh my gosh!
So it sounds like they're interested in selling. They don't want to lose the house in Georgia. They love the house in Georgia.
Yeah.
And so it seems like everybody wants the house that they want. We're just in a hiccup of how to get there. So,
gotcha. Is there any way to get there's equity because people who are buying the house in Georgia get out of that,
so
tap into that
well, that's the thing is those clients qualify without even having to sell, and they own multiple properties. So that's why it's like.
So why are we doing
because
that?
In the offer we had the contingency in there, so we have to take the contingency out, and they didn't agree to do it. They wanted to sell and then pay, or just have a smaller loan or something, because the property they're buying in Georgia is like 1.2 million or whatever.
Yeah, I totally get that. Is there any chance that I guess it wouldn't matter as much if it's higher loan amount, but I was talking to somebody yesterday that there's actually a secret mortgage hack if you're thinking about putting 20% down on a home.
Okay. Go on.
So let me ask you this first: is your property better with insurance?
Is it better with insurance?
Yeah, is it do you feel more at ease with your property being insured?
Oh yeah.
Do you feel more at ease with your property, with your auto being insured?
Yeah.
So lenders feel a little more at ease with their loans being insured. And what actually happens is you can actually get a better rate, maybe by 1/8 or so, on a 95% loan to value conventional loan with private mortgage insurance in place than putting 20% down and doing your conventional loan.
And the amount for the insurance is less than the amount that you'd be paying in that monthly increase of the...
Well, here's what you do, actually. On a conventional loan, you can do what's called a recast. Have you ever heard of a recast?
No.
So basically, you say, hey, I'm going to buy this $500,000 house.
Okay.
I really want to put 20% down, but I've listened to Trent does mortgages, and I know this mortgage hack, so I'm only going to put 5% down. And because of the mortgage insurance, the lender says, hey, this is insured loan because of mortgage insurance, so if I default, I actually get better terms than putting 20% down, where there's no mortgage insurance. So if I default, they don't have anything insuring the property. So what I do is I take and I go, all right, I'm going to take and make my first payment after doing this. So my loan amount's going to be $475.
Okay.
And then I'm going to put the additional 15% down once my servicer has been established. I call them up, said, hey, I'm going to put this amount down, $75,000 in this case, and I'm going to recast. And recasting, they go, great. We're going to use the rate you currently have in place, and we're going to base it off a now $400,000 loan amount. And because you're at 80%, we're going to drop the PMI.
So let me get this straight. They're willing to give you a better rate with 5% down because they have PMI on it than with 20% because they don't have PMI on it.
Yes, because they feel more at ease with the loan because it's insured.
Are you guys listening to this?
I know, right? It was great. I ran the numbers. I heard about it, and I was like, no way. But then I ran the numbers, and I called 3 different lenders on it. I'm like, hey, my primary 3 I like to use for conventional loans. And they all came back, and they're like, yeah, that's totally a thing. And one of them said, I don't really know why this is odd. And then, a couple more I looked into it, basically said, yeah, the reality is with mortgage insurance, it's more insured. So we feel more at ease with it. So you get better terms when somebody feels more at ease with something.
So assuming you're going to just put down 20%, you may as well put down 5%, get a better rate, recast after you close with the putting the rest down to that 20%.
Oh, yeah. And
you don't have to get a new appraisal because it's within that time period anyways.
Right. Well, it's not a refinance.
It's not a refinance, it's just a recast.
Right. A recast, you call up your servicer and for a small fee, it varies from lender to lender, but 95% of them will recast a conventional loan. So you have maybe $100 to $500, depending on the servicer, to recast it. And now you have the better rate with the loan amount you're going to start with anyway.
Unbelievable.
I know, right? Mortgage hacks.
Unbelievable. But yeah, but if you're not planning on doing that, obviously you're going to have a higher monthly payment. So you have to have that 20%.
Make sure you're doing that. Yeah. Yep. Make sure you're do that is part of the plan. Now, if you're just not going to put as much down, just enjoy having a little bit lower rate, knowing in the back of your mind that you're getting better than somebody who puts 20% down.
Well,
rate-wise.
My thought is that I'm going after this to go show a house to a client that, I'm showing a number of houses, but he really likes this place. And he was planning on putting down 20%, But I'm thinking maybe if he doesn't mind, that might work too.
Yeah, as long as it's a conventional loan. That's the caveat. Yeah, it works there. Non-QM doesn't work because there's no PMI. And then with the FHA doesn't work there. You can't recast an FHA.
Which makes sense.
Yeah, you got to refinance those.
Yeah.
So
interesting. Okay, so we all learned something today. Exactly. And you said 95%. So is there a chance when it gets resold that new lender, the lender that actually owns it now, isn't going to want to recast or won't allow a recast?
So it's servicing. So it's basically, you have to talk to the servicing. So occasionally you have a couple of different things. Sometimes they hold it for 1 month. Sometimes they hold it for 6 months. Sometimes you never change servicers.
Interesting.
It always varies. And I've heard so many different ways because I talk to a lot of lenders. There are some that keep it portfolio and it never moves. But usually they have like some little bit different terms for that are portfolio only. But typically everybody moves these things around.
Okay.
So,
and just for everybody, we'll dummy this down. You close on a loan with a lender. More than likely, they're going to sell it off to another lender on the secondary market that is going to either hold on to it or resell it later on. You know, you never know with that stuff anyways.
Yeah.
That lender might pay what we call a servicer to take care of the loan for them, even though they're the proprietary of the loan. They might not actually take care of the loan, accept the payments and all that stuff. And so your payment actually might be going to a servicer that's taking care of that loan. It doesn't actually own it, but is, you know, they're the manager of the loan. So that's basically what it is. And that's how most of, you know, lending gets done.
Yeah. Yep.
So, because otherwise the bank has to hold on to the loan. It becomes a portfolio loan. And in that case, it limits the amount that they'd be able to loan in the future.
Exactly.
You know?
Yeah. So they want to be able to get that money back.
Right.
They want to lend it out again. They need to help the Joneses after they just sold the Smith's loan.
Yeah. They need to cycle it. So there are some loans that they are willing to hold on to. Yeah. But those are kind of special loans. They're usually unique or something. Yeah. And they won't be easily sold to the secondary market. And with the secondary market, you know, you got Fannie and Freddie guidelines, you know, that go with that too. Yep. So anyways, I thought we'd dummy that down because you're talking and I'm like, I understand what you're saying. Right. I wonder if the general public understands.
Tell me like I'm 5.
Yeah. How the lending system works. Right. Because it is different and you get resold on the secondary market.
Yeah, it is tricky too because like, but then they should be always like, not every check's the mail because they're honestly, when you close on a mortgage too, that's one of the things I love providing as like a lender, like follow up with me after you close. Because I get a lot of questions like, hey, I just got this in the mail. It says something about, you know, home insurance. Is this like something I need? Or like, it's like a mortgage insurance. Don't I have PMI? But it's somebody trying to sell you like in case you pass away or something, you know, taking care of it that way. It's a different service. But they're so sneaky about these things too. They'll put like, I am with this mortgage company. It'll look very close to like Empire or look very close to the actual lender who did the loan, UWM, you know, Resi Central, you know, something like that. And so you're like, oh, maybe I do need to open this. They're so sneaky these days.
Oh yeah. I mean, they go after title companies. They'll pretend to be title companies. Oh, you need a copy of your deed.
Oh yeah.
You know, $125 or whatever, you know. And it's like,
I need that.
Yeah, actually just talk to your title person. Like if you have any questions about it after closing and you're getting any weird information, call up and actually don't go with that email. Go with your original contact.
Yes.
And call that person, you know, and just ask them, hey, I got this email.
Right.
You know, they'd be happy to, you know, have you step off that ledge because most of the time we see that stuff and we're just like, oh shoot, I do need that. I never did that after they forgot to tell me.
Right.
You know, and so, but it's all scams. They're all just trying to take advantage of people. So, I mean, they do that with wire fraud, all sorts of stuff during it, but even after, they're trying to steal your house.
Yeah. Yeah, no, it's crazy. That's why, like, you know, just because you signed and the money was wired, like, I'm always here for you as your mortgage advisor, take care of, you know, whatever you need, whatever questions come up. You know, I've even had somebody ask about homestead exemption. They're like, does this reduce my mortgage payment? I'm like, well, it will reduce what the mortgage company collects from you because if your taxes go down and they're escrowed, meaning that they're held in an account that, you know, for your mortgage servicer to pay your insurance and taxes on your behalf, then they won't do it on the spot, but they'll do an analysis. Typically December is a good time, saying, hey, we thought the taxes were going to be this. Did they come in at more or less? Yeah. Less is always good. You can get refunds if it's over $50. If it's more, you might get a phone call saying, hey, you have an escrow shortage, meaning that what we thought was going to cover your tax and insurance, we actually need a little bit more money.
Interesting. Don't they normally just send it in your bill the first time? I feel like as soon as they make those adjustments, they don't call or let me know. They just all of a sudden up in the bill, there's a discrepancy on this amount. The estimates didn't work out in arrears, know, or whatever. A levy came up, or
they'll do that a lot more times because it's probably easier for people who put their payments on auto pay to just let that keep going. You know, all right, well, wait a minute, my payment went up $90. Yeah. Well, you do have the option to say, hey, I like my $90 payment, and I'd rather just pay you the difference now. You can do that.
Oh, interesting. Okay.
Yeah, you can do that, and then your payment goes right back.
Well, that's true. You can always pay that, you know, up front to you. That's, because there's in the state of Florida, I'm sure this works within in a lot of other states too, but you can actually, there's a lot of programs like PACE programs and stuff that you can put as taxes, and then they show up as property taxes. But at the beginning of the year, when you get your tax amount, either it's going to come out with your taxes and adjust with the mortgage and everything, or you have an option just to pay it up front, that amount for the year or whatever. But I will say they're high interest loans. And, most people that take those PACE programs out end up having problems because it's treated like a property tax. Yeah. And your property taxes go up so much. And then it really affects everything.
Cause a lot of issues like on selling it or like.
Yeah, it'll have to get paid off on at selling because it's a lien on the property.
Yep.
So, and then it can affect you even taking equity out of your house,
Oh, yeah.
So having that on there. So there's a lot of things with that you got to take into account. I don't think they're the best programs, but if you need a roof, even with poor credit and all sorts of stuff, you can do that and put it on as your taxes with the PACE program and whatnot. Yeah. So it is an option, but it's not always the best option. So I just wanted to bring that up because I see it a lot in real estate. I'm just like, as soon as you run the property search and you get the liens on the title search, and you're just like, what is this? What is it? And things that most people don't even know. But I don't remember when I did that. I don't know how that.
I didn't know that they're putting a lien because they're not going to tell you. Yeah, maybe it's somewhere in like the the fine print that we're putting a lien against your house for this much, but.
They might even say it in the verbiage. It's just, I don't think people know what they're talking about. Like they just read it or whatever. And they're just like, oh,
I'm getting
okay,
this.
Yeah.
This is acceptable.
It solves my problem.
Yes.
I'll solve my next problem later.
Yeah. It's down the road. Future me's got that.
Yeah.
Future Perfect.
But yeah, so I just wanted to bring that up. But also to go back to Trent always being there for people, the original story that we were talking about, the listing agent, Trent has no involvement in this deal. The listing agent uses Trent and has trust in Trent, so calls on Trent for his advice in a current deal that Trent's not even in.
Yeah.
So that's just to go back. We're always available for phone calls, like just for whatever.
Exactly. I mean, because the main thing too is that it's like, all right, well, I want to be able to be there, and so that when the next deal comes through or they got the buyer, they're like, you know what? I just went through, and this is actually, they're on their second lender coming through because that first offer fell out. They're on another one now. So obviously tensions are really high. Tension mitigation is one of my specialties, superpower of mine. But
you can tell by his calm, I escalate things. Trent brings them down.
Yeah. But no, like they just had a string of bad lenders, not communicating, not being transparent. And it just caused a lot of frustration.
Yeah.
Just, we brought it up before, just be the buffalo.
Yeah. I think my biggest thing is when I have problems with lenders in the real estate world is lack of communication. As soon as there's like an issue, it's like, then they stop communicating. And it's like, just tell me you're working on it. Just text me, I'm working on it. Yeah. I don't even really care. As long as I know that, hey, you're on it.
A solution's in play.
Yeah. So,
yes.
But as soon as something goes wrong, like you really start to know who the lenders that have your back, because all of a sudden those lenders disappear. Like I'll be the listing agent for somebody and we're like, okay, well, how's this going? Like, we get in the emails being like, it doesn't sound like this is going so well. No. And all of a sudden we can't get a hold of the lender.
Yeah.
And it's like, you were like Johnny on the spot, like every call before then.
Yeah.
And now all of a sudden there's hiccups and you've gone.
Yep. Yeah. So. Well, it's funny because I called this out too, because she called me and she was like, well, why do you think they need an extension? I'm like, oh, it's funding. It's funding. There's funds somewhere, some way that they're waiting on. Yeah. That is the only reason to delay. So if you're gonna be like, I need a few things from the borrower, I'm like, this is code. I'm like, you either are waiting for, because I've had this happen on a transaction where they put their 401k up as having an account. Now underwriting underwrites it, saying, hey, we can use these funds, and then, but their real intention is that by the time they close, they're gonna get another paycheck. They're actually going to use that. They want to wire from that account and do it that way. So I'm like, it's probably funds. Maybe they did it that way. And then this is when the whole Orange County down payment assistance issue came about. And she called me back. She's like, you were absolutely right. It's funds to close. And I'm like,
there's a third party involved.
It's a third party involved. But yeah, that's probably what it is. Maybe they miscalculated something. They're short funds to close. They got to get a gift letter. Somebody's not, maybe the relative's not wanting to give the gift now, or there's some issue. But funds to close.
It is always funds. And I will say that kind of goes with just about everything. If you hire a contractor, if you have a pool built or whatever, there's usually certain, like there's 3 or 4 payments or 2 or 4 payments that you're going to make throughout there. But a lot of times what these companies do is they'll take future business and they'll use that money on current business. And then you get to that future business and you're waiting for more future business because that became your current business. And I know that's what happened when we were building our pool. We'd get to a certain point and I know the pool company ran out of money and they're waiting for more income to come in to finish my pool because they made promises and they spent money that they shouldn't have spent or whatever. And then it took extra long. I was just grateful because it was during the COVID time that they finished my pool.
Oh yeah. So, everyone's getting pools then. I don't like around the pool.
I will say they did a fantastic job, but it took so long and the way everything was, I was like, there's funding issues. There's funding issues. And then at the end, I was like, we owed the last 15%. And we did something where we took a loan out on half and we paid half. And the half we paid, the bank wanted us to pay up front. So the first 2 payments we made with our, full amount, it was like 15%, 30%. And then they paid their 30% and 15% at the end or whatever was owed, or 25% of that. So I think they were still waiting for 25%. Well, the bank was supposed to pay the certain amount, or we agreed to pay a certain amount, that the 25%, they would finish the last portion. Well, the bank said, hey, until you finish that last portion, we're not giving you the 25%. And the pool company's like, yeah, but it's in the contract that the clients would pay us. And they said, well, as soon as you allowed us to come into the, into the deal, then it got pushed to our schedule, which you signed off on, and you have to finish the pool before you get that 25%. So the pool company held them accountable. And so it took 15, 16 months to get to that point where we were almost done. And then as soon as the bank's like, we're not giving you the last 25%, they finished it in 2 days.
We won't get paid. All right, we got you.
Yeah.
We'll be done.
And they got their 25%. But I was like, this is where actually having a third party like a bank, where you can't really push around a bank too much.
They're like, they're just we're not releasing the funds.
Yeah. You're going to try to sue us? Yeah, that's not how things work. I know in pre-foreclosures, things, even if you're right, you're going to be wrong because the bank has more money. It's just how things go. But anyways, that was a kind of a tangent. I don't even know how that started. We were talking about third parties
and funding issues.
But anytime you have people put stuff off, including banks, wherever, it's usually a funding issue. That was the whole point of it. So anyways, I thought this was filled with all sorts of fun stuff.
All types of nuggets and gems.
And I was worried because Trent was using a lot of energy before this. I wasn't sure he'd have the energy for this. I thought we might start and he might be tired. He might need a nap. So anyways, thanks, Trent.
Absolutely. Thank you. All
right. We'll catch you all next time.
See you in the next one.